The data center containment market is on a striking growth trajectory, poised to nearly triple its value by 2034, a trend that signals how critical efficient data center cooling has become for the digital age. But here's where it gets controversial. While many celebrate this rapid expansion as a necessary evolution to meet data demands, others question the environmental footprint and long-term sustainability of such large-scale infrastructure growth. As of 2024, the global data center containment market was valued at approximately USD $2.44 billion, and forecasts predict a surge to around USD $8.10 billion by 2034. This corresponds to a robust compound annual growth rate, CAGR, of about 12.75%. from 2025 through 2034. The phenomenal rise reflects the accelerated reliance on digital platforms, notably intensified by the freelance and gig economy's expanding footprint, showing how modern work trends drive tech infrastructure needs. Key highlights from the market include: North America led the market in 2024 with a commanding 41% share, maintaining dominance thanks to its vast hyperscale data centers and influential cloud service providers. The Asia-Pacific region is projected to exhibit the fastest growth rate throughout the forecast period, fueled by rapid digital transformation and investment in cloud infrastructure. Regarding containment types, aisle containment, both hot aisle and cold aisle designs, was the most prevalent in 2024, praised for balancing cost and operational efficiency. However, modular or containerized containment solutions are anticipated to grow at the swiftest pace, as their flexibility caters well to the evolving needs of scalable and agile data centers. Deployment analysis reveals the end cap containment configuration held a significant market share last year, but the in-row containment method is expected to lead in growth, thanks to its precision cooling capabilities in high-density, space-constrained environments. Among data center types, hyperscale and colocation facilities dominate demand due to their immense size and need for optimized thermal management, while edge and micro data centers are rapidly growing, driven by the surge in low-latency computing and 5G deployment. The clinical supply development segment was the largest market contributor in 2024, though IND-CTA enabling services for advanced modalities are set to expand quickly over the coming years. Metal or hard panel containment systems, alongside engineered curtain solutions, currently make up the bulk of market share due to their robustness and reliability. Meanwhile, prefab modular pod materials facilitating rapid deployment are the fastest growing in this category. Medium-density rack environments, 5 to 15 kilowatt per rack, represent the largest segment, balancing efficiency and demand, yet high and ultra-high density setups with requirements surpassing 15 kilowatt and even 30 kilowatt per rack show the fastest growth rates. In terms of business models, outright product sales and turnkey installations lead revenue generation, though performance-based contracts and capacity rentals for modular and edge data center deployments are rapidly gaining traction. So, why is containment such a hot topic? At its core, data center containment involves partitioning airflow and temperature zones within facilities to boost cooling efficiency, reduce power usage effectiveness, PUE, and protect critical IT equipment against overheating. Solutions range from hard panel enclosures that physically isolate hot and cold aisles to flexible curtains and modular, container-like pods that can be deployed swiftly. This market's growth is driven by the worldwide explosion in cloud computing, big data analytics, and AI workloads, all of which generate massive heat loads. Energy costs and carbon regulations are forcing companies to adopt smarter, greener cooling solutions. AI is even reshaping the industry by enabling predictive cooling and dynamic airflow adjustments, turning containment into an intelligent, adaptive system rather than a passive barrier. North America stands at the forefront because of its extensive hyperscale data centers, representing tech giants like Amazon, Google, and Microsoft, who aggressively invest in containment innovation. This leadership is supported by strong regulations encouraging energy efficiency, significant venture capital funding for green tech, as well as collaborative ecosystems involving universities, operators, and vendors. The growing importance of 5G and edge computing is adding impetus to smaller, agile data centers, maintaining North America as the benchmark globally. Meanwhile, the Asia-Pacific region's skyrocketing growth is driven by countries like China, India, and Singapore advancing their digital economies. Longer-term sustainability goals and government incentives promote containment adoption, while booming internet penetration, 5G rollouts, and smart city projects increase demand for efficient colocation and edge facilities. The cost advantages in this region also make it an attractive area for hyperscale expansions. Current trends highlight a strong movement towards modular containment systems that offer rapid deployment and easy reconfiguration, perfectly suited to the modern data center's need for scalability and flexibility. Sustainability remains a key priority, pushing the integration of software-driven automation tools that enhance monitoring and energy savings. The rise of hyperscale data centers is another catalyst for large-scale containment adoption. Yet, despite these positives, real challenges remain. The sizable upfront investments required can deter smaller enterprises, and retrofitting existing centers is often complex, expensive, and disruptive. Additionally, varying standards and technical difficulties, like airflow leaks, can slow broad adoption. There's also an ongoing debate about how necessary containment is perceived to be, with some organizations viewing it as optional rather than essential. Looking ahead, opportunities abound, especially in edge computing and green data center initiatives. The demand for quickly deployable, scalable containment solutions is rising, supported by partnerships merging AI capabilities with containment technologies. Emerging markets present particularly fertile ground for growth. Diving deeper into specifics, aisle containment remains the backbone of the market because it efficiently separates hot and cold airflows at a competitive cost, particularly in legacy hyperscale and enterprise centers, mostly in North America and Europe. Modular containment is surging fastest, prized for its rapid, phased deployment, adaptability, and minimized downtime, attributes that align well with colocation and edge data centers' dynamic needs. End-cap deployment dominates due to its simplicity and cost-effectiveness, especially beneficial in standardized rack layouts and large-scale facilities. Conversely, the in-row approach is advancing rapidly by targeting precise cooling in dense, high-performance environments. Hyperscale and colocation centers lead demand because of their vast rack counts and stringent energy efficiency requirements, with cloud giants investing billions in containment tech. Edge data centers grow rapidly due to the decentralization of computing and IoT trends, requiring compact, efficient containment. Metal and hard panel systems dominate due to durability and long-term performance, suited for demanding large data centers. Prefabricated modular pods are gaining share because they speed up installation and reduce disruption, key for modern scalable environments. Medium-density racks are the most common today, balancing operational cost and performance. However, high and ultra-high density centers are growing fastest, driven by AI and HPC workloads needing cutting-edge containment solutions. Product sales with turnkey installation still lead in how companies procure these systems, yet newer, flexible business models emphasizing rentals and performance-based agreements are expanding quickly, reflecting a shift towards operational expense, OPEX-centric approaches. Could we be underestimating the environmental impact despite these innovations?